Hello, trading has closed on let's see, September 28th, 2021. And let's start with our disclaimer as we do always. This is my trading plan for tomorrow, September 29th, 2021. Just remember I can be completely wrong and all trades should be at your own risk. We said that yesterday's pattern didn't have the normal rally into the close, and either you rallied and took out this high early, or else there'd be a straight line drop, which is this. So here's just a reminder of what we said. This was the pattern with the early high, and tomorrow's pattern has the early low. During the day, MEJT didn't have a lot to say. It did give a signal to go long here in the afternoon. Well, actually, it just goes a buy signal. It told us this drop wasn't going to stick, even though the market was dropping. It said that wouldn't stick. We didn't have to go as high as we did according to the signal, but there was a buy signal. Let's talk about the longer term stuff before we get into the shorter term things, which is where I do all my trading, or most of it. DeMark's indicators finally were to call the top right at the actual top. As long as they continue to work, there should be more of a drop than we've seen. You've got support at and one bar below this line here, which is 42.17. This is the moving average. Which one is this here? That's the 200. That's the 200. This is the 50, and this is the 200-day moving average. If this keeps on dropping, you'll find some support around the 4,200 area because of the DeMark TDST line and the 200-day moving average. I think that's my minimum target for this drop, although I think we're going to drop more than that. A lot of times the market will play Fibonacci ping pong or moving average ping pong between the 50 and 200 a day moving averages roughly. So it gives you a rough idea of what your resistance and support levels are going to be. This is the weekly chart. This is 41.73. Again, there's support. Under it, this is a Bollinger Band. So it's one more reason to think the 4,200 area is the next area where we'll find significant support. This is a monthly chart. This is very ominous picture by his work, but I don't think we're going to drop down to this line. That's a 29.65, and I don't have anything saying we're going to hit anywhere near that price, because when these things work, if they're really going to collapse, you're going to see more of a drop in the first three trading bars than we've seen. This is the pattern we've had before. When we broke last Monday, we broke below this line. We said all we had to do for confirmation of the break was to undercut this low and preferably close below it. That never came. Then we went over the line. That invalidated this. I said all we needed for confirmation was to go over this high and preferably close over it. That never happened, so now we're back reinstituting the significance of breaking through this line. And if the call is right, I'm looking for a drop somewhat similar to this wave blue A and wave blue C, but until you undercut some of these prior lows, you just can't be confident that's the right call. I'm just going to act as if it is until it gets invalidated. It's certainly acting appropriately so far, although it really should be a more intense collapse here if it's going to be like this one. And so far, that has not happened. There are some people I see online who still think we're going up from here. You can actually count this as an ABC complete, but I think I wrote this in orange instead of red because I think you're kind of kidding yourself if you think that's what's going to happen. We're going to drop more than this. If we have completed 5 waves down, it certainly isn't the only way to count this. I think it's just the first leg of this red C. But if I'm wrong, which has happened, and we go straight up, this is the count which explains it. Now this low here is a Fibonacci target of the prior consolidation. It's also a Fibonacci target of the left stilt. Here's a stilt, here's a diamond. The origin of the left stilt is support, but we dropped right through it, and that means that level, which is around 43.91 or so, becomes resistance, and any rally here is going to run into trouble around 43.91 cash. If you look at this line here on the 5-minute chart, it's possible to count 1, 2, 1, 2, 3, 4, 5 is 3, ABC for 4, and wave 5 down. And wave 5 down is just about equal to wave 1. It's not perfect, but that's awfully close. So if we do rally from here, there is a count which explains it, although I don't think it's the end of that wave C. I think it's just A of C. Doesn't make me right. We also have a sharply down day, gap down, hit a low, lower lows, closed over all the lows. It's a bullish pattern. It should lead to a higher price tomorrow, unless we take these lows out early, ideally by gapping under them. But for right now, that's a failure of follow-through, and as of this close, it's a bullish pattern, should lead to higher prices. Again, tomorrow's open is what counts. We gap and open down here, this whole thing doesn't count. This is a daily chart. There are E-mini spikes associated with lows. You'll see Monday's low had this E-mini spike. We actually got a pretty good bounce up. Here's a big volume spike with today's drop. Wouldn't surprise me if my count was correct and we got a bounce up here, even though long isn't where I think the money's going to be made. If that's the right count, I wouldn't be surprised to see an ABC up, and if we hit 43.91, that wouldn't surprise me, and even the Fibonacci correction of this drop doesn't kill the bearish long-term picture. While tomorrow's pattern has the early low, we could still gap up. Normally it's a bullish day with a final hour high. If it's weak instead, more weakness should be seen in subsequent days. Today's drop is compatible with the expectation that the leg up ended in early September. I'm continuing to look for a sharp move lower, similar to the move we had early last year, but until some prior lows fall, that could be wrong. With that in mind, any calls for a rally here should be taken with caution, and surprises should all be on the downside, and a sell and hold trading plan should work. You can put up with the volatility. Just remember, all the biggest percentage moves up in history have come in bear markets, not bull markets, as the shorts try to cover. I'm looking for places to sell here, not places to buy, even though I think this could be a short-term low. That being said, there's a good case to be made for a little rally tomorrow, a bounce. There's a VIX Bollinger Band reversal buy signal, an E-mini volume spike, compatible wave count, a sharply down day with a close over intraday lows. Once again, significantly undercutting today's low kills the idea, and I personally would be suspicious of the call failing if we don't gap and move up smartly from the open. This is not a place where I'm looking for new long. This is a place where I'm looking for rallies to go short. So tomorrow has the early low. If this holds, though, I think there's every reason to believe we trade higher, probably into the close. And that is today's call.